Well, hello people. We got ourselves an interesting day coming up with some good old economic data to hit the tape. Core PCE numbers. Goldman Sachs sees a little bit of an opportunity, so we're going to talk about that in today's Stock Market Brief Show, give an overview of where the market's at, give you some gamma levels, and go from there. Sorry if it's a little echoey in this room. Still working on getting the noise dampening down, We're going to hop right into today's show. If you want to look at the pinned comment or the description, you could download today's chart deck to get the levels on your charts. I also have information about the swing trading community for a whopping $9 a month, and it comes with all types of goodies and some stuff that I don't even think I have. Well, it's listed over here. It's not on the main page, but we're going to talk more about that on another day. We're going to start hopping in by looking at this cool chart. The red line is the S&P 500. The blue line is the CNN Fear and Greed Index. I'm bringing it back, baby. Why? Because the blue line right here is starting to reach into extreme greed, as it's known. And if I look back at a chart of the S&P 500, you can see multiple times where we have came into extreme greed, and it has marked turning points in the market. The most recent one was right here, and we had a little bit of volatility, but then we started ripping higher. Well, the signal is back again, back at it again with the white vans. Okay, if we take a look at the SPX, this is also taking place right in around the upper monthly expected move. So the market is moving with what the market determined at the beginning of the month, right? That's the risk, the range of risk that the market anticipated based off of implied volatility. That level's at 49.10. Even if you take a look at the Qs, we got outside of it slightly, but we're just slightly below it. It's 426.77. We're at 426.35. We still got time left in this month as well. I did find this interesting. We have some macro updates on some of this data. This is the Bank Term Funding Program. And let me tell you something. I don't know if the Bank Term Funding Program, I'm not that smart to understand if it has an impact on the S&P 500 or various markets. But when I pull up this chart, the blue line is the Bank Term Funding Program. If you don't remember, that was designed when just after the Silicon Valley Bank blew up. Okay? And take a look. What was the market doing? Well, the market was going sideways and it was getting some volatility. And as soon as this kicked into place, the S&P 500 rallied, right? And then what did the blue line do when we went through the correction? Well, it started flattening out. Up until recently, we started ripping again. And what does the blue line do in the Bank Term Funding Program heading up? And this is supposedly ending March 11th. All right, and there's something about like this arbitrage and how they can take advantage of it to make money. So it's, I don't know, it seems a little wacky. But when I look at this chart, I mean, I can't help but say that, yeah, this looks like it had an effect on the overall market. So what happens when we pull the plug on that program? I don't know. If we take a look at bank reserves over here too as well, this one ticked down slightly. So liquidity coming out from that perspective. And this hasn't been moving up nearly as much as that Bank Term Funding Program. But you can see when we started to get that kind of sharp move up right here, near the kind of around the October bottoms, but slightly after there into 2023. When we saw that sharp rise, this is when the market started really rallying hard. And you can see during that correction, we weren't really going anywhere. Then we started moving up again. And then right now, it's kind of pulling back a little bit, diverging from price. So that's something kind of interesting to pay attention to. Now, it's an hour before the market opens up. We have core PCE data, personal income, personal spending, right? This is going to add volatility, and we're going to see now what the market is pricing in as far as risk going into tomorrow. And then we'll get into the absolute versions of it, looking at the candlestick charts, okay? And we have a lot of macro data coming up too. So these are the daily expected moves. This is what I share on a daily basis with the Discord community. If you are signed up, make sure you sign up through Patreon, but then you have to sync your Discord up. I post everything in Discord. I don't post anything on Patreon at this current moment. Okay, so if we look at the daily expected moves going into tomorrow, what do we see? We're seeing implied volatilities kind of move up a little bit here. They're pretty large moves. So these are plus or minus, right? So SPY is plus or minus 2.72. Qs 3.46, 2.39 for the Russell 2000, and then SPX, the S&P 500, which is typically around 22 to 23. We're looking at a 26.55. Dollar there expected move. I even include the 2 sigma levels just in case if we get some sort of a surprise to watch out for. And I'll show you what that looks like on the charts momentarily. Yesterday, we shared a couple of levels on Bookmap for ES. That was 49.45 and 48.65. If I update you on that, The levels are still there. So the likelihood of getting some of this liquidity filled going into tomorrow's data, I think is likely. If we look at the daily expected moves for ES, it's 48.90 to around 49.45, as we listed right here, 49.45 and 48.92 there. So pay attention to those levels because those are fairly large levels of liquidity, right? We have a pretty big level that's been down here now for multiple days. That's 608 contracts. So if we get some sort of hit to the downside, could be an area to pay close attention to if market like comes down. It doesn't mean buy the dip, but maybe perhaps it builds a base and we start seeing strength. Maybe it gets back above daily VWAP or something like that, and then we can potentially play a move higher if that's the case. Okay, but this could also, on the flip side, could be a potential level of resistance, but doesn't necessarily mean that it has to be resistance. Okay, so wait for price to actually how it responds to these levels. Now, if I take a look at ES from just a candlestick perspective, we did have this shooting star candle, this doji candle, and since that point, we have had an inside trading day, and this is, I think, right now taking place. Overnight session, just inside trading. So this right here, expansion, contraction. So price is contracting up going into this report. So I would expect to see some volatility. If not tomorrow, we do have a lot more macro data coming out the following week. So it's something to be aware of. If we start cracking down the low, that could confirm, a more of a pullback. But if we start cracking above the high, that opens up the door to come try to re-hit this 49.33 level. If you take a look at Qs are a little bit different of a story. We actually had that shooting star candle, very similar, and and then today was an inside, well, it was went a little bit outside, right? Right here, but it was another shooting star candle. We saw some strength, reversed on itself, okay? And then now we're starting to get under that level in the aftermarket trading session. So we'll see where we open up, and if we get some confirmation to come down to maybe test this lower level down here and potentially further. So that'd be one to watch. If we take a look at the SPY, on the 15-minute time frame, we have the upper daily, lower daily expected moves. We've been right around the weekly expected move pretty much, for the last couple of trading days. We came up into it, we pushed away, we pushed back down, we came back into it, we pushed away, and we came back up to close the day right there as well, okay? So I know that it's a little bit down in the aftermarket session. We had Intel report earnings. They're down about 6%. Overall, though, we're still in a positive gamma territory. The 5-day moving average is still inclining. Price actions is just consolidating right now, not giving us really anything to worry about. It's if we start really kind of breaking down from this lower daily expected moves and start coming lower, and the 5-day moving average starts to flatten out, to turn around, and then maybe perhaps that would equate to some more downside. Overall, we have that 4,900 call wall, and that has been acting as that big level of support. So this is probably going to act as that level of resistance, going to hold as a level of resistance unless we get some strong velocity outside of it. But really, we have a lot of macro data coming out in the following week, so I don't really see it get too aggressively above 4,900. I feel like it's going to be kind of just floating around that area. We went for it twice, right, to try to get above it, even over here on the prior day, and we just couldn't do it. It keeps on getting rejected from that levels. So I'll be updating these gamma levels on tomorrow's live stream. I think I'm going to be on early in the morning. We're going to now look really quick at what Goldman Sachs said today. I'm just pulling this from an article. I saw this on a couple RSS feeds, but I just pulled it from an article from the Zero Hedge, and they're showing this IWM spot vol correlation and just how positive it actually is. But I'll just read what they said, and then we'll look at the IWM chart. So they said, so where does the Goldman desk think that they can move? First, they still like the Russell upside despite the recent pullback, okay? Big deal. They're saying with short exposure at multi-year highs and looming catalyst, which we've just previously discussed, the case for owning calls here is attractive, is what they say. So if tomorrow's PCE data confirms a disinflationary trend, some investors will be hard-pressed to still be carrying high levels of short exposure into next week's remaining events after the striking Russell move we saw in November and December. So basically, what they're saying is there's a possibility here for a potential short squeeze. And this right here is showing that traders are reaching to protect, to hedge their current position. So similar to other short proxies, namely China, which we believe is now blah, blah, blah. Goldman traders have also observed a very rare, right, positive spot vol correlation in the IWM, and that was as investors rushed to hedge those shorts on rallies, and we're seeing that right there on this chart. So it's never happened as stated. So, I guess there's a possibility here that we might see some further short squeezes if if the PCE data comes in as expected there, as they stated. Now, if I look at IWM here, just from a candlestick perspective, we're looking at the 15-day period. First and foremost, I mean, we've been having these gap up and fades for now 3 trading days in a row, but price is still consolidating and holding some very key levels. The key levels that I'm paying attention to here is the year-to-date anchored VWAP, the swing high right here, anchored VWAP, and then the 5-day moving average. And right now, the 5-day moving average is inclining, price is above it. We're above that swing high anchored VWAP right now, and then the year-to-date anchored VWAP too as well. So right now, this looks like the opportunity to potentially push higher. However, if we start getting below that 194, give it potentially some more time to see if we turn back up, or if this starts turning back around, that might be that resistance, and then we start heading a little bit lower. So I think the opportunity is there. Remember, the data comes out an hour before the market opens up. If we gap down, right, this will be looked at as a potential island reversal pattern. That's what people will start saying. And in theory, from a psychological standpoint, you get a lot of traders get chopped up in here, okay? And then all of a sudden you get a gap down, and all the people that were buying up here freak out, and then they sell their position or whatever the case is, which could increase more sell side activity, and that's what gives it that kind of bearish connotation there, that island reversal pattern. But they, from the flip side, if price was coming down, boom, and then we gap up, that would be a bullish, right, island reversal pattern right there. That's all I got for you on today's episode, everybody. Hope it helps out, gives you some key levels, and I'll most likely be live early tomorrow morning, not here on YouTube, but on Twitch. So if you want to follow me on Twitch, I have it in the pinned comment and the description, I believe, as well. All right, see you later.